What is going on, Outfitters? The markets are closed for the week of August the 16th. And let's see what went on this week because every day, I think we were up every day. So there you go. That's what you need to know for the week. Let's take a look at it, talk about kind of some of the data that we got this week and a little bit of what we got coming up next week. So a little bit of a gap up to kind of start the week on Monday, but kind of a flat day. I mean, it's just kind of choppy, little pullback bounce, and just kind of sideways the rest of the day. Nice gap up here on Tuesday as we got PPI data. Came in a little bit lighter than expected. Ran bullish the whole day. Wednesday morning, we got CPI data. It came in a little bit lighter than expected. Nice little gap up, pulled back, bounced, and kind of just settled sideways then, ending positive for the day. Thursday morning, we got weekly employment data. Nice gap up. We actually had a reduction in initial jobless claims. So there you go. Nice gap up. Nice push. Very strong bullish day on Thursday. And then Friday, people taking some profits early on, early market gap down. And then it just kind of rallied in the middle part of the day and just kind of settled out sideways. That was kind of the way the market went for the week. And as far as that PPI data that we did get, it did come in at 2.2%. The market was expecting 2.3%. Prior did come in at 2.7%. Wednesday, we got CPI, and it came in at 2.9% with forecasts expected to come in at 3%. So there you go, a little bit lower than what was expected. Core inflation, though, year over year, did come in at 3.2%, which the market was expecting 3.2%. So there you go. And the initial jobless claims that we got Thursday morning came in at 227K. Forecast was calling for 235K. So a little bit of a pretty good drop there. So all those signs were pointing pretty bullish this week. So as far as next week, we're not going to get a whole lot of crazy stuff, but there will be the Jackson Hole and FOMC minutes. FOMC minutes will be on Wednesday, but Jackson Hole will be going on next week. So there will be Fed people giving a lot of press conferences, and then Jerome Powell should be giving a speech next week as well. But we'll be getting the typical weekly data points on economic stuff, but nothing outside the norm or really big that you need to be kind of watching for. It's just Jackson Hole next week, and I don't expect any kind of shocking things from it. To me, next week will probably be a non-event. It will not be anything like it was 2 years ago when, remember, Jerome Powell comes out and said, there will be pain, and then the market kind of rolled over there for the next about month and a half. But I don't expect anything. I mean, I think the data's starting to come in, not deviating too much from forecasts now, and I think it'll be a pretty much a flat event as far as unexpected data points and talking points. As far as sector rotation for the week, tech. Tech is all you need to know. XLK. There you go. Tech was crushing it all week. People were continuing to buy the dip. The next big tech player, especially in the AI space that we're going to have earnings, is NVIDIA's coming up. Not next week, but it'll be here in a couple weeks. So that'll probably be the next big one. Other than that, we did have discretionaries also outperforming on the week. Everything else underperformed. Financials, materials, industrials, healthcare staples, communications, energies, utilities, and real estate underperforming the most there. All the sectors did end the week positive also. All right, take a look at that VIX. Well, since that big, huge spike up we got 2 Mondays ago, it has absolutely come back down. This has got to be one of the faster collapses on the VIX from that level, maybe ever. I mean, I'm not going to absolutely say that for sure, but I mean, breaching over 50 and then within 2 weeks later, you're back under 15. That's got to be the fastest we've ever done that. So very, very impressive. DXY, dollar index. Well, earlier on Friday, when I was looking at it on the live stream, it hadn't completely dropped off like it had by the end of the day on Friday. So, yeah, it looks like it wants to go lower. Obviously, this is the lowest close that it's had since, all the way back in January. So, be interesting to see kind of what happens. I was still kind of thinking up until we closed like this on Friday that, we're probably just in a sideways choppiness. But the way that looks, I mean, we're probably going lower. Typically, when you end on a low like that, you will at least go lower a little bit. Now, how much farther that is, I mean, that's always the question, right? I mean, we're definitely getting pushed down. We've had a hard time getting back above the 10 EMA. So we're getting pushed down there on the DXY. So not too surprised really. But GLD, the Gold Trust, over the past couple of weeks, definitely have been looking at this. We had this nice little run here at the beginning of July, but then we got into this choppy sideways kind of pattern here, and it was looking good, man. It was looking good over the past couple of weeks. We've talked about this a few times, and I was like, man, this looks super good. The way it ended there on Friday, the way the dollar looks, the way gold looks. I mean, if you can't be bearish on something, you might want to be bullish on the GLD, and it looks pretty good, man. Who knows how far this thing's going to run? It might run for a bit. The 10-year yield. Well, it definitely is getting pushed down by that 10 EMA, but it hasn't completely dropped off, not like the dollar. So, yeah, we'll see if early this next week it drops off. I don't think it's going to continue to drop off as much. It might be in a sideways choppiness. That I'm going to stick to that for now. I'm not one to think that yields are going to push all the way back down like where they were a couple years ago. So yeah, we'll just have to see. The 10-2 inversion. Okay, so we tried to bounce off the rising moving averages here to start the week, but yeah, we just dropped off there Wednesday, Thursday. So it's not. I mean, it's not like we're rolling back over. We might. It's very possible, but obviously from uninverting very quickly 2 Mondays ago to now, we've 3 days in a row we've kind of are bouncing here where these tops were back from late in 2023, early 2024. So we might consolidate here. We might not see much on the yield curve move too much, especially next week. I mean, we don't have much in the way of data that should be pushing different yield curves around next week. HYG looking pretty good here, continuing higher. Risk on in the bond area, so it looks pretty good. Yeah, hitting some highs that we haven't seen since, oh man, a couple years. Going all the way back to basically August of 22. So it's been about 2 years since we've been at this level. Actually, it has been 2 years since we've been at this level. And the question now is, are we going to get through that level? So yeah, that'll be an interesting one. LQD also hitting some highs that we had late in last year and then even early last year. So you gotta like this cup handle look. It looks pretty good. So if we get through this like 112 area, yeah, it'll look pretty good to keep going higher. So LQD doesn't look horribly bad, especially getting that little lower wick there on Friday to probably get pushed higher by the moving averages. TLT is a little wonky here. Obviously, we had that huge climb to start August, at the end of July, beginning of August. A lot of that was, the flight to safety, going to the safe stuff, the treasuries, and then, yeah, I mean, it dropped off pretty quick. We saw the rotation back into risky assets. We saw that with HYG there, but it is getting pushed up with the moving averages. So eventually, probably just keeps climbing. RSP looking pretty good. Nice gap up there on Thursday. End of the week, pretty solid. I think you're probably just going to be buying any dips for now. That's all I got. RSP looking pretty good. DIA, probably looking to be buying any dips. I don't see why you wouldn't be. We had a nice gap up there on Thursday. Yeah, it looks pretty good. The IWM having a little bit of a struggle bus session to kind of get it back up to the highs that we were putting in a few weeks back. But I mean, it's getting there. It's back above the highs that we had back in Q1, Q2. So it'll probably just eventually keep grinding it higher. Qs, this is the one, man. This is the one that's a weird picture, right? Because we were rejected at this level back on August 1st, and it's right here where this neckline is. So I want to say that we'll probably eventually get through here, and maybe we should definitely do it this next week. So we had that retest right there, and then we rolled over. So now we're back to this spot. So what happens? That's gonna be the question, man. That is a horrible horizontal line, but yeah, right there. So that's gonna be the interesting one. Are we gonna reject here twice? I don't think we'll have like a massive rollover. I would be looking for the pull back more than anything else. We did just have 2 weeks. If you want to look at what the weekly looks like, I mean, we just had 2 weeks where it just absolutely exploded higher from that last Monday gap down, or 2 Mondays ago gap down. So, yeah, some pretty good volatility here over the past 6 weeks, but we can definitely be buying some dips for now. Obviously, you're probably going to have a very solid, stop loss, at least moving it up to, the low of August 5th, up from the lows of, back in mid-April. So yeah, you're probably looking pretty good to be bullish for now. And same thing kind of goes for the SPY, although the SPY has been a little bit stronger here over the past month. Maybe not so much the past 2 weeks. Obviously, the Qs got hit really hard in that sell-off with big tech profit taking, but SPY also has bounced back pretty good. SPY's not too far from its all-time highs that was hitting back in mid-July. Hard to believe that, second half of July we dropped off all the way into the beginning of August, and then we're back to being pretty close to all-time high, kind of earshot range, right? So I think you're probably just gonna be looking to be buying dips. And the reason why I kind of say that is because, well, we definitely got through some resistance levels, support levels. You're above all the moving averages. So if you pull back some, like, you're gonna get dip buyers to come back in and to try to continue to ride the wave higher. So it makes sense. I don't see why you wouldn't want to do that for now. And we'll see how things kind of set up later on. Alpha hunters, have a great weekend. Take care.